Well, we got a master performance from Fed Chair Jerome Powell yesterday, saying as little as possible while avoiding all the pitfalls and not mentioning stagflation once. The Fed confirmed on Wednesday that the targeted federal funds rate was to be held at 4.25 to 4.5%, following its rate-setting open market committee meeting. It said uncertainty about the economic outlook had diminished, but remains elevated. But Powell did signal that higher prices are coming as the US Federal Reserve kept interest rates on hold, but also signaled that it still might make 2 cuts this year as growth slows. That sounds like inflation up, growth down. Sounds like stagflation to me. Of course, Donald Trump continues to break with President and demanded lower rates. Hours before the central bank announced its latest decision, Trump called Powell stupid and predicted rates would be maintained on Wednesday. Trump said he's a political guy, not a smart person, but he's costing the country a fortune. Trump, of course, has continued to attack questions over the Fed's independence. Of course, the central bank has repeatedly stressed that it makes decisions based on economic data rather than political interventions. After Powell spoke with the US president last month, the Fed said that he had made it clear that its actions will depend entirely on incoming economic information and what that means for the outlook. Whilst uncertainty has faded, the committee said it still remains significant. The Fed Chair Jerome Powell cautioned that officials expect tariffs imposed by Trump to increase prices over the course of the summer. And there are still a lot of unknowns about the outlook for the economy and interest rates as the US president stands by his controversial tariff plans. And they also downgraded their estimates for economic growth. But all up, if we stand back, we can see these stagflationary forces at work, even if central bankers prefer not to use the term for fear of scaring the horses. Rate cuts will be slower, inflation will be higher, and growth weaker ahead. Not necessarily a great recipe.